Well, ladies and gentlemen, with that cue, it is time for us to begin with the Realty Plus Conclave West. We're talking about 2023 with an exclusive conversation on the topic, the Indian real estate paradox, growth amidst global uncertainties. Well, whilst as the stage is being set, it's my honor to now introduce our speakers of this session. First up, the session is going to be chaired by the Managing Director, Capital Markets and Investment Services India, Colliers. We've got Piyush Gupta. He's somebody who's responsible for developing the capital market business in India and leads the client acquisition, developing institutional relationships with the Indian and global funds, sovereign funds, banks, NBFCs for capital market business. Somebody who's got more than 20 plus years of experience. Piyush is an industry veteran with a proven expertise in the real estate investments, asset management, as well as exit strategy. Also joining would be our eminent speakers. We've got the country head India of Tishman Speyer Private Limited, Parvesh Sharma, who's going to be joining us. A seasoned real estate professional with more than 29 years of experience in all aspects of real estate value chain, which includes the land acquisition, project development, property management, as well as leasing. Somebody who's currently responsible for developing and driving the business growth strategy in India and through investing in business parks, development management assignments, and advising global corporation. Also joining would be the MD and CEO Commercial Real Estate Raheja Corp, Vinod Rohira. Somebody who has an illustrious career spanning 27 years with the Raheja Corp Group, truly steering the overarching operational and business development strategies for the group's expansive commercial portfolio. He's also on the board of directors of the Raheja Corp Investment Managers Private Limited, also the investment manager to the Mindspace Business Park REIT. He's also a director on the board of Raheja Corp Homes, which is the residential arm of the group. So ladies and gentlemen, with that, I'd like to humbly invite all our speakers now on the stage. Let's give a warm, warm round of applause to all of them. First up, Piyush Gupta, joined with Parvesh Sharma and Vinod Rohira. It's going to be a great conversation, requesting all our eminent dignitaries to join us. Thank you so much, Piyush, for curating this conversation for us with our two eminent speakers, Vinod and Parvesh. Thank you. Over to you.
Thank you, Realty Plus, for having us here. It's always been a pleasure to be part of Realty Plus events. We have two veterans of the industry, Parvesh Sharma and Vinod Rohira, with us, and we talk about how are we seeing real estate in the next few years. But if you just take a step back, we are kind of navigating, the Indian economy is navigating through the global uncertainties. There have been global headwinds, but the way we have come out in terms of managing the economy and the entire growth story has been phenomenal. And if you talk about more about real estate, we have seen some of the best performances, whether it's office absorption, residential has seen some of the best performances across products, affordable, mid-market, luxury. New asset classes have emerged, warehousing, industrial, data centers, retail, hospitality has been doing exceedingly well. So we are looking for a very strong, structural, positive change in the Indian real estate perspective. And I think it will be good to have some great views from our two eminent panelists. Maybe Vinod, if we can get you here, and maybe we just talk about office. For example, last year we did about 50 million square feet of gross absorption. Year to date this year we have almost touching 40, which is a very good indicator. How are you seeing the overall demand on the office perspective in next 2 to 3 years time?
So I think primarily what we kind of continue to have to remember is that where is India positioned in cumulatively the tech footprint for the world. Right? Before we get into how the markets are, the commercial real estate footprint in India is predominantly driven by tech companies who have globally chosen India to be their place. In the last 20 years, you've seen a transformation, and every 5 years there's been a generational shift in the quality of work that India has serviced to the world. Today we are doing cutting edge tech. We no longer do basic call center and KPO and BPO stuff we used to do 10 years ago. The talent pool is very different. The ask is very different. The base that India has created is very different. I don't think any country can catch up in the next couple of decades. So if you look at a 5-year runway, with costs being the way they are, and companies want to survive and they want to increase interface of technology, they have to come to India for talent. And if they come to India for talent, by default, with the geographic position that India is in and the primary cities that will take away 80-90% of that demand, by default, with work from home becoming something that we have almost now forgotten, and India will be 100% back on the desk, give or take another 12-15 months, even in the harsh, resistant tech footprint, you will see people back in office. So with all of that, cumulatively, you see a very significant demand trajectory coming in the next 5 years. Because you will see growth. Most of those companies have paused in the last 12 months. Most of the large RFPs are not there, but if you actually go on seeing how many GCCs and GICs are getting added to the footprint, you'll be amazed. By the time you're in 2030, we are looking at another 400 million square feet worth of requirement for commercial real estate to fulfill the NASSCOM numbers for just occupancy. And I don't think you're going to be able to deliver 400 million square feet in the next 5 years. So that's really the footprint. So you will see tremendous amount of demand. What we're also forgetting is we have not seen domestic demand. Domestic demand as part of the commercial footprint world over constitutes 80-90% of the footprint of commercial real estate anywhere else in the world. In India, it's 90% tech. When you're moving from $3 to $7-8 trillion economy, you will see a significant kicker from domestic demand coming for quality grade A space because they want quality talent, they want to be in prime markets. That demand has just about started picking up. So I think cumulatively, you'll see a home run.
I think it's a huge number, 400 million square feet demand kind of coming in the market. And with the changing demand dynamics, Parvesh, your thoughts, what kind of shift you're seeing from a demand and occupied side with the so much of growth we are seeing from tech to more BFSI, domestic demand? What demand shifts are we seeing from an occupier standpoint?
See, one of the important indicators is that in spite of the headwinds in the global market scenarios on the office side, which is the most talked about things, India is still a very resilient market and various factors contribute to that one. India has the talent pool, which obviously is the biggest factor for us to provide the manpower to the GICs and the GCCs of the world. And that's where the demand has moved from the BPOs, KPOs to the GCCs. And that has also improved the real estate quality, what they look for. When the demand was more for the 4x2 workstations for the BPOs versus the bigger workstations and better office spaces, the rental requirement, the quality of the office space, that has all increased. That has definitely benefited all the real estate requirement across the country. We have seen certain pockets has been benefited more as compared to the certain other pockets here. It is all dependent upon the HCM or the human capital requirements for the different companies. We have seen the Apples, the JPMC, the Morgan Stanley setting up their the capability centers in India, which is a good validation of what Indian employment or the Indian talent is available for these kind of a companies. So I think the tech sector will continue to be the demand drivers in the office sector. But the manufacturing, if you see globally, that is manufacturing has been the biggest contributors or the requirement from an office point of view. Given the push in the Indian, the government push for increasing the manufacturing within India, there will be a lot of demands coming from the manufacturing sectors. We had already seen that the cities like where the manufacturing hubs are already established and established sectors are growing there, like the Pune, you have more demands coming from the manufacturing sectors. Chennai, there is a lot of demand coming from the manufacturing sectors. Bangalore continues to be driving the tech sector demand. So those continues to be there, but I think the mix, when you look at the pie chart in the next 4 or 5 years, that mix is probably going to change more toward the manufacturing side. And the tech sectors will continue to create as a larger pie of that one. There will be more segments which will get added to these requirements.
And just adding to your point, Parvesh, since even the infra development, has been very widespread, we did also see some of the tier 2 and even tier 3 cities developing for office. We are seeing that demand clearly on the warehousing, the logistics side. But on the office side also, you see the key demand going beyond this 5, 6 cities?
That's very interesting question, because yesterday night only I was talking to one of the largest occupier in the world, and they are their head of the real estate, global head of real estate, asked that questions upfront, that right now they have the presence in Bangalore, Hyderabad, Mumbai, Chennai, and Pune. What is the next phase of the growth they are looking at? So that question has become more pronounced, and I think every discussion what we have it, people are looking at beyond these 6, 7 cities. Where are the next cities to be become the Bangalore's and Hyderabad's of India in terms of the requirement? There are number of contenders for that one, for the tier 2 cities which can provide the right kind of infrastructure. All the state governments, I think they are doing extremely well in providing that right infrastructure, providing the right kind of incentive for these occupiers to come into these market. There are challenges going to these tier 2 cities in terms of the human capital. Everybody will taste some of these tier 2 cities by starting with a smaller requirement and then scaling up that requirement. There we have seen it, even a larger occupier, they start with 100, 200,000 square feet, and then they continue to expand within that campus, within that city, and then it becomes a multi-million square feet requirements from these occupiers. I think the same trend will go to the tier 2 cities also. People will start with their representative offices, 50 to 100 people starting that office, 10, 20,000 square feet of a demand, and then that demand growing to a larger requirement. Once there is human capital also start shifting to these cities, some of the human capital which has moved from the tier 2 cities to these larger cities, they go back to their hometowns and start, because that is comfort is always available with the, when as a humans, we always stay comfortable where we started. So I think that will go back to these tier 2 cities. Now which cities are able to benefit more as compared to the others, that is yet to be seen, whether the cities in the north or in the west or in the south. I think south already has larger demand and larger occupancy here. There is west and north, where there are a lot of tier 2, tier 3 cities now which are trying to catch up and provide the right kind of infrastructure incentives to attract these talents and attract the companies out there.
Thanks, Parvesh. Vinod, I think from a developer perspective, the opportunities are galloring across asset classes. So from your perspective, going beyond office and maybe industrial or residential are also becoming the more key focus for growing the overall portfolio?
I think there's cumulatively growth in every vertical of the business. What you need to focus is to be very cash flow driven. 20 years ago, you looked at land banking and said that you were a great real estate developer if you had land banking. I don't think anyone now does land banking, because if there is something that is infinitely available, it is land, and it will continue to be available. Then you will have redevelopment opportunities, and you will have other asset class mix opportunities. So I think whatever gives you cash flow, where you see the latent demand, because every 5 years there's a generational shift that's taking place in the kind of product you can build, whether it's residential, commercial, retail, hospitality. It's changing really fast. Markets are changing, infrastructure is changing, and the lion's share of demand is going to move where infrastructure moves, because the population in the workforce that's entering the workforce now and for the next 10 years is going to be completely migratory. They will move to locations where they have all the comforts, the social infrastructure, connectivity, job opportunities, and a cumulative captive mass. So whether it is tier 1 or tier 2 or tier 3, wherever you are able to get all those triggers right, you will see growth. And of course, manufacturing will piggyback. If you become anywhere close to global scale manufacturing, you will definitely then create a captive environment around where you've set your manufacturing. The closest cities, if they are productive enough with infrastructure, will grow. So all of these combined will create many new opportunities. I mean, if just one bullet train happens between Ahmedabad and Bombay, forget about Ahmedabad and Bombay. The 5 stations in the middle will balloon, because in 15 minutes and 30 minutes you'll be in BKC, which you never thought of, and vice versa. So these things can dramatically change the footprint of how you build real estate. And you have to keenly and closely watch infrastructure. Real estate will be incidental, infrastructure will be primary.
And also from the residential standpoint, and we have seen markets consolidated in last 3 or 4 years time. There are very few quality operators in all the markets. So for a resi space specifically, and where we are seeing the structural upcycle, I think this is an opportunity which developers will want to exploit in a big way, not only from a perspective of completing uncompleted projects, but the demand has been so strong and across product lines. So you think this is what was driving office for last maybe 10, 12 years time. This phase of growth will possibly be driven from residential?
See, residential, as we've always seen, is 10-year cycle with 7-year memory. We always forget the mistakes. So when there is euphoria around the volume and pricing, you have to be careful. You have to do smartly. You will get benefited. What's better is to have a stable marketplace than a crazy marketplace. So the faster you reach a stable marketplace, the better it is for residential real estate. Today everything goes, anything is selling, whatever you launch is going out. You end up making mistakes in markets like this. You've got to be extremely careful, because your consumer is not going to scale up at the scale at which you want to bring in supply. And we are seeing cities where there is crazy amount of supply overrun already, but we are not watching the demand space there. The demand is great right now. Will it catch up with the supply? I don't know.
Parvesh, your thoughts?
No, I think India is still having, on the residential side, there is a lot of headroom which is there, and we also notice that if you see globally, the countries which has considered, or the developed nations, there the population which is living in the urban spaces are much higher than which are there in the rural spaces. And that the graph is much towards the urban population. There is 70–80% of the population which are there in the urban places, and that drives the demand. That demand in India, it's very large. India is 1.3 billion population, so that demand will continue to grow. Apart from that, I think the aspiration values has grown over the last 5–10 years. Younger population, the average of age of the people who are buying home at 40 plus, that has come down to below 30 now. So everybody wants their first home when they touch 30. That is what the aspirations are there. And when they become 40, they are looking for a second home. They are looking for a bigger home. So that demand, I think, will continue to grow. And the demand is also going to grow into different segments also. The demand which was 5 years back, people were saying that 2 BHKs are selling as a fast moving product. Today, thanks to COVID and other things, people are saying that 3 BHKs are the fast moving product as compared to 2 BHK. So the aspiration values, the requirement will keep bringing the demand there. And I think the urbanization is a big component to that. So we were there at NatCon event last week, and all of these guys were very bullish about the housing demand which is going to happen in India. And there is a huge potential. See, one thing which we always neglect, and we probably don't look into that carefully, when US is a 330 million population, and you look at the office demands in various cities. The Manhattan itself is having 1 billion square feet an office. The entire India is about 700 million square feet with a 1.3 billion population. So if you translate these kind of numbers toward the resi sector also, everybody needs a housing. So that housing demands will need to grow. It is a cyclic demand, means today everybody is bullish and there is a euphoria that there is no end to it. You launch a product, it gets sold. I think people need to be careful about that, and that this is not a long-term sustainable thing. But on an overall basis, that people need to be very careful in picking up that within the demand, which is there should not be a mismatch in the segmentation of the demand also. sometimes people go over bullish on the luxury, ultra luxury segment, whereas the demand lies in the mid segment. That happens with various cities. Mumbai has seen it 10 years back. I think the other cities will also take a learning from that history. So that demand mismatch in terms of the segmentation should not be there, but in terms of the overall, there will be demand and it will continue to be.
I think an interesting point, and we spoke about 1 billion square feet of office only in a city like New York, right? Or if from a Boston perspective, what warehousing stock we have, we may not have that integrated stock in that country. But this is also gives a challenge of how do developers and investors grow the portfolio, and maybe are there enough opportunities in the market, whether on the office side or logistics side or even other real assets with the data centers. Is the Indian market giving enough opportunities for investors and developers to allocate capital?
I think the market itself is something which will set the trends and which will balance it out a lot of things. Today, the land cost is something which it is the same land which can either use it for office or which you can use it for residential purpose. Just because the demand has hit higher on the residential side, it makes sense to do the residential. So the commercial office will become slightly more challenging in terms of the return points of view. The euphorias around the logistics sector, what we have seen it, the affordable thing from a logistic point of view or a warehousing point of view, the land values has to be in a certain price range. And we have seen it that the price range has moved beyond that. So then people has to look at different asset class probably in the same location or on other location. We have seen it what has happened to Navi Mumbai because of the data center demand. The land pricing has gone up 3x, and we know how many of these will turn into reality and how many of these will probably get into a different use altogether. So I think the market itself is a big balancing act from that point of view. The demands from one sector shifts to another segment, and that will automatically change the things, whether you use the same land for A purpose or a B purpose or a C purpose.
So, your perspective, the gap between the bid and the ask, is it getting wider, and hence possibly we are not seeing enough number of transactions in the market?
See, when you're specifically looking at commercial real estate, let's understand who's our consumer. 80-90% of that consumer is an occupier who wants to rent. Unlike 20 years ago where you had 80-90% buying, right? So, which means that you got to build grade A plus assets. For building grade A plus assets, earlier, for example, in most cities, your densities were between 1 and 2 times the land area. Now, the concept of density has turned on its head. It's between 5, 6, 7, 10 times the density. So let's assume you had a 4-acre piece of land and you were able to build a 4 lakh square foot building there on 2 density. Let's assume you had the land with you, you want to build it. It will cost you around 200 crores. You'll probably have a 50 crore equity and you'll take debt of 150 crores and build that asset. Now you can build 1.5 million to 2 million square feet on that land. Your equity can't balloon to 500 crores. Your ability to take debt doesn't go to 1500 crores. You're waiting for someone who's going to give you speculative capital. Speculative capital is not getting deployed unless you're a grade A asset manager who has the opportunity to demonstrate that he can build, he can lease, he can manage the asset, he can get the tenants in. So that's why there is a massive gap, which is why there's a massive opportunity. And in a weird way, inflation is your best friend, right? Because by default, you're not willing to put speculative capital. Very few people are putting speculative capital. And the way we see demand, that demand will have to scramble for only grade A. That demand is not going to grade B and grade C. So you will see significant vacancies in grade B and grade C. You will have 0 vacancies in grade A plus assets. And that's really where the opportunity is. But unfortunately, spec capital has paused because the belief is still not there on the demand cycle. So those who will pour concrete in markets which are relevant today will get the lion's share of demand. So that's really where the opportunity is.
Also, from an investor perspective, the yields on an office or even a warehousing asset have kind of remained stable, maybe 50, 100 basis point. And a investor sitting somewhere else in US or Singapore, when he or she is allocating capital, how India remains attractive, considering the given yields are, and which is a challenge. Hence, we are not seeing a lot of global capital which should have come to get into India. So India is not lucrative from a comparative perspective.
I think that the good point is that the flight to the quality, that is definitely a big positive here, that everybody is, and during the good time, means you will see even the B grade or the C grade building also getting occupied because there is no availability of the space. It is during the bad time only when there is a more supply there, the people will tend to move towards the A grade and A plus grades. So that is a big positive for the flight to quality. The other point which people miss out, and I think when we talk about Western colleagues, they see what is happening close to them and they start making the opinion based upon that one for what is happening in India. And it takes a lot of conviction for convincing those guys that the capital has to be provided for a development, which today is far and few and very scarce capital to come on the development side, because people are taking that view that, okay, what is happening to the Western world, same thing is going to happen to India. One missing thing is that the real estate have a longer gestation period as compared to any other sector. So you start building a new campus, it will take 3 to 4 years. So you have to forecast the demand, what is going to happen in 3 to 4 years time rather than what is happening today. Today also, if 40 million square feet is going to be the gross absorption in the bad times in India, India has never done a degrowth from the requirement point of view. It is always growing. So I think what is happening in the West, we cannot put the same, with the same paintbrush, we cannot color India. It is a different growth and demand drivers in India which will continue to do well. And also there is, as we said, there is a lot of headroom in India itself to grow more. So those factors need to be considered, and then the gestation period. You can't be building when the demands come in. Means if the demand comes in 26, 27, you have to start building in today for that.
Just to add to what he said, he's essentially you're asking for returns. Your average rent for grade A plus assets is $1 a square foot, right? Your closest neighbors in Singapore and Hong Kong are between $4 and $5, and then you can go up to $8 and $10 a square foot a month. What infra is doing is changing certain micro markets dramatically, right? And those micro markets, because of infra, are becoming CBD in those markets. So if I give you example of Hyderabad, Madhapur, we got the land free by government. They gave us 100 acres to build jobs, right? There was nothing at that point in time. We built the first building and leased it to Bank of America at 20 rupees. Today we are leasing that asset at 75. I wouldn't be surprised that market will be $100 as CBD grade A assets in the next 5 years. Because there is no CBD asset getting built. Grade A will be that number. You will have infinite vacancy for assets you will not want to go in. So those mistakes will be blatantly visible for you, because certain assets which don't offer the experience, the customer is not going to go there. They may be sitting in the same neighborhood. Secondly, what's also important is, while we are spending top dollar on building assets which are future ready, whether it's sustainability protocols, whether it's the amenities, the infrastructure inside buildings, the design is actually grade A compared to anything else you see in Singapore or Hong Kong or wherever else. And you're still at $1 rents. So the minute your rents rise up, your yield is going to rise up. But it's a 8-9 year cycle. So you got to invest today, wait that cycle out. You will get an average pop of between 4 and 5% annual. And at the end of that 9 year cycle, you'll get another 20-25% pop. So that's really where your growth will be. And that's why you need patient capital for India. You cannot invest in a 100-meter race. This is a marathon. The next 10 years, you will gain a lion's share of profit if you hang on. But if you're looking at flipping assets in 2 years and 3 years, then you won't get the return.
I think there are a lot of interesting points to discuss, but I see the time up thing on front. But just last question to both Vinod and Parvesh. If at all you were to pick up top 3 asset classes within real estate as a developer to invest in next, say, 5 to 7 years time, which will be top 3 asset classes?
Commercial, residential, retail.
I would follow the same one because I think the commercial office will continue to grow. There is no second thoughts about that one. And as Vinod mentioned, there is a flight to quality is the most important one there. So it will be the same sequence.
And you know, there will be new asset classes which you're not counting. There's going to be hospitality that will grow because leisure hospitality will grow for India. Healthcare facilities has a huge opportunity to grow. Education has a huge opportunity to grow. Industry has a huge opportunity to grow. And piggyback with that will be logistics. Well, the numbers don't stack up today, but at some point in time they will.
With this, I think thank you so much. I don't know whether we have time for opening up for audience for any
Sure.
questions.
In paucity of time, can we allow a couple of questions? All right. So if any of you have any questions, kindly raise your hands. We'd get the mic passed to you. Else, of course, we're open to having the speakers network as per their schedule. Does anyone have any question? Okay, I believe that was a well-rounded presentation and a conversation. So I think on that note, let's give them a warm, warm round of applause,
Thank you so
ladies and gentlemen. And with that, if I could have the editor of Realty Plus, Sapna Srivastava, to kindly join us and help us with the felicitation. If you've liked the conversation, I think we can give them a bigger, bigger round of applause. Thank you to all our dignitaries. And with that, a big thank you to Piyush. Thank you for curating this excellent discussion. You know, Sapna, they need the best shot, yeah? So, thank you so much, Parvesh, for joining us today. Thank you so much, Vinod, for giving us your valuable time, ladies and gentlemen. And with that, of course, requesting our panel to come together for a group photograph. Ensure you give us the best smile.